Hey everybody, Scott here. Thank you for joining me. Hope you're having a great day. Today we're going to take a look at San Diego home sales statistics for April of 2024. We're going to look at the median and mean sales prices as well as the supply and demand factors that may tell us what's going to happen in the coming months with prices. So, once again, thank you for joining me. Let's take a look. Apologies on this video. Due to a house flood, we are in temporary housing and all crammed into a very tight office. So the background is too busy for my background removal software to work. So you get to see us in all of our temporary clutter. This month, I'm going to do things a little bit differently. I'm going to look at everything on a 10-year chart with the goal being to show not only month over month and year over year changes, but give it a little bit of historical perspective. So this first graph here is the median price for detached homes. And once again, for those of you who didn't major in statistics, the median price tends to be the price of the average home, whereas the mean is the average price of all homes. So the median, you can see here, has been on a very aggressive ramp up since the end of December. So we're actually up $150,000, which is about 17% in 4 months. We have not, if you go back historically, we've very rarely seen this aggressive of an increase, and most likely what we will see is a correction. How big a correction will depend on what happens with interest rates, and more on that later, but this kind of growth is not sustainable for very long. That's about a 65% annual growth rate, and we're not going to see that. Looking at townhomes, we have a much more controlled growth. We're still up 6%, 6.7% over last year, where we were up 14-15% on the detached homes. So this is more moderate growth that may be a little more sustainable. Now let's look at supply and demand issues, first focusing on demand, and that comes via the number of sold listings. So on the sold listings, you can see that we're up 6% over a year ago, and we've had some pretty steady increases, but that's normal for this time of year. We always tend to increase early in the year. Historically, we're very much lower than we have been in the past. That's just more a factor of there's so little inventory that we can't match sales from 10 years ago, and that's one of the main driving reasons why we've seen that very steady price increase over the last several years that has been accelerated. Now we switch over and look at the attached homes, and we're actually down over last year on the sales of attached homes. And once again, attached homes, if you heard me before, are more interest rate sensitive because they tend to be first-time buyers who are putting less down. So a jump in interest rates affects them more than somebody who's been saving or already has a home and has more money. Also, a lot of our sales recently have been driven by relocation. We've got, like in North County, we've got Apple, we've got Google, Amazon, all bringing people down here. Those people tend to be management level. They're coming down here, they're going to hire engineers that are already here, but they're going to move management down. Managers typically have higher incomes, so they're buying more of the single family homes. So we're seeing the sales there increase, and that's one of the reasons we've seen the prices increase faster. Now let's look at another factor for demand, and that is pending sales. So this is a good indicator of what's going to happen next month. And you can see we're up 3% over a year ago, but once again, historically, we're very low. Now there was a little dip in April. That's not uncommon in the number of pending sales because the first half of April, people are focusing on their taxes. They're spending the weekends getting everything to their accountant, or they're doing it themselves. But they want to wait till they know what that final number is. Do I get money back? Do I owe? Before they go make a big investment. So we always see a little bit of a slowdown the first 2 weeks in April, then it picks up. The reason it didn't pick up this year is we had the big rise in interest rates the first week of April. So everybody lost 7 to 10% of their purchasing power. So what's going to be interesting to see is when we look at next month's data, do we still see a healthy number of new homes going into escrow, even with the higher interest rates? Now let's look at the supply side of things. First thing I want to look at is new listings brought to the market, and we've got a healthy 19% increase over last year on new listings coming to the market. So this is something to watch. Once again, historically still a very low level compared to what we've seen in past years. 3,500 was the normal. We're sitting at 1,800 as we're getting near the peak of this year. Now, if we look at attached homes, once again up 31%. So attached homes are up even more in terms of new homes being brought to the market. Now let's see what the cumulative effect is of that by looking at the total active listings. And we can see total active listings were up almost 19% over last year. So that's a significant increase in inventory. Now, the problem with this chart, if you go back a couple months ago, I did a video and I detailed why all this data is wrong. Basically, MLS was miscounting, or the way they were doing active listings caused agents to play some games that padded the numbers. And so this from about this period here, actually I think it was from July 16 down to here, really was more of a steady drop. It's just the MLS caught what agents were doing in this period, enforced the rules, and so all the inventory came off the market very quickly. So it wasn't a steep drop here, but still we're significantly below historical levels in terms of overall supply. And looking at attached, we kind of see the same thing. We're significantly below where we were 5-6 years ago, and this is why we've seen a dramatic increase in pricing. Now let's see what the overall effect is for this on the months of inventory. So you can see we're up 90% with the attached homes and 38% with the detached homes over last year. And we're now sitting, if we look at all property types, at 1.9 months of inventory, which is a 46% increase over last year. This is significant. Okay, I usually don't see prices start to drop until we get over 3 months of inventory, but we're seeing some pretty aggressive increases. What we need to watch is, does demand stay high with interest rates at this elevated level? Because it doesn't look like the Fed is motivated to drop rates anytime soon. And if we get an increase of inventory that continues month over month, we're going to start seeing the months of inventory increase closer to that 3.5 level, where we will see some price softness. So overall, market is still favoring sellers. If you're looking at selling, especially if you have a place you can go for a year, might not be a bad idea. Sell your place, sit on the sidelines for a little bit, because if we keep seeing inventory rise, you will see a little bit of softness. However, on the other side of things, if we go back to the sales price, despite the fact that rates have gone up incredibly, over this period, prices have continued to rise. So talk to your financial advisor, see what he or she recommends. But I am paying attention to inventory, and will continue to do so, because that's going to determine where prices go. Okay, I'm going to post a link to a couple of videos I have done talking about things I do differently when I'm selling a house. If you're thinking of selling, if you have investment property you'd like somebody else to manage, love to hear from you. Just feel free to reach out. I'll put my contact information or access to my calendar in the comments below. Thank you very much, and have a great day.